Hi, how's it going, everybody? We're going to finish March off here in a couple of days, right? So this is the midweek update for the 29th of March, our first quarter. Is that right? January, February? Our first quarter in 2023, and we've done a whole lot and then have done nothing. A lot of volatility, a lot of choppiness. Let's get to it, as this is a pretty good psychological test. I've got my 2 cents. We'll discuss it. Please feel free for you guys here live. Type into the chat board as always, and I'd like to read alongside you. Put in your trades as well. If you're going to follow the trades, take responsibility for them. So let's get to it. Gappy and choppy. That's it. We're just gappy and choppy in the markets with no clear direction. We have bulls and bears that are at a stalemate right now. And what I mean by that is everything's being shaken off. Good news is being just beaten down by the bears, not letting it go too far, and bad news is absorbed almost immediately. And what's interesting is this creates a lot of volatility that goes nowhere. And no, I don't mean the VIX volatility. The volatility index itself is actually below 20 currently. We'll get there in a second. But just the price action is outrageous. Super active, super polarizing. So we've got a polarized bull and a polarized bear. They're extremely outside. We have a lot of opinion, and it's interesting because I see it here at the firm as well. We're all subjected to psychology. We're all human. Even myself, geez, folks, I find myself digging through, and it's not who I am. If anybody has ever met me or worked with me, I do not care about why things happen. But I even caught myself trying to figure it out because the markets aren't really giving us much. So we got optimism versus pessimism, and that's just the sentiment, straight up. We've got a really good gap up today after a pretty good rollover or a move lower yesterday. That seemed to retrace itself. So it's tough for me to gauge who's actually winning right now, but we'll get to the charts and we can discuss that as a class. Still hot in housing and unemployment. I kept that from last week. This housing number, we'll take a look at it in a minute, was high. It was high. And it's staying high. The activity's high. In fact, I think it's we'll get there. I forget which one, but consumer sentiment, excuse me, it also went up. So we've got a bullish consumer. We've got an active employed consumer. We have a housing market that continues to sell. Some prices are coming down a little bit. We do have a rate that has dropped. Remember, I don't know if it's great. I don't know. I haven't checked the interest rates when it comes to mortgages. However, the interest rate itself has actually dropped in light of this bank, or because I would say of this banking issue. So we have this weird double-edged sword going on, and we've got a lot of problems when it comes to what's good and what's bad. And you can see it in the price action of the markets. There's the soapbox for today. Let's get to some of the nitty-gritty here. Now, as far as trade ideas, polar opposites. I am not seeing anything that's sticking neutral. It's going to make up its mind, and it truly does. Now, there's a lot that's been neutral after it's broken out and pulled back a little bit. In fact, there's some of the bull trades. You'll see these here and the bear trades that are ready to roll over, but they are in bearish and bullish patterns. Nothing really neutral. Nothing stays neutral. In fact, Intel up top here, folks, was a bull trade that was a neutral trade last week. And in fact, let's start with it. So check it out. This was a neutral trade, and it's looking a lot more like a bull trade. I don't know if this is any sort of news or earnings or whatnot, but it is definitely showing some signs of bullishness. We looked at it, I believe last week was probably it's back in this area here. And we figured it would peter out right around this 30 and maybe the 28 mark, something sideways, right? It could still do that. The day is not over. It's up 4%. The day is not over. It could finish with one of these, right? We've seen this before. And then it could roll right back down. So you guys that are in a sideways trade with this, please don't abandon it. Don't freak out. That's why we position size for max gain, max loss. Stick with it. Stick with your guns. Write it out. A big part of trading over the last week, and I just believe through the next month or so, we're getting into the spring, is going to be test your grit. It is going to get above your weakest point or below your weakest point, which whether you're going bull or bear, and it's going to correct itself. It really is going to have you just have to grate your teeth and just sit through it, because I truly believe, not to show my card too early, that we're in for some choppy, nasty markets through the spring. Yeah, I don't want to be too glooming, but that's just my opinion. Doesn't mean we can't trade them. We just got to trade them differently. Now that can change. Let's go over to GFI. This is one that Corey found I thought was interesting because of what it's attached to, and that's gold. So that is a huge move on gold. I think a lot of that stimulant probably came from the banking worries. And what is interesting, folks, a lot of people just glossed over, this wasn't just the U.S. bank. Credit Suisse, this isn't happening just in the U.S. and it's one or two small banks. My opinion. We'll see if that carries over. A lot of the market's weakness, I believe, of last week was the SVB actually posted $142 billion of deposits, withdrawals out of their banks in 2 days. That is a massive bank run. We haven't seen anything like that in a long, long, long time. Maybe since the 30s? I don't know. But that you actually go to physically to go to the bank. This you could just do it online. So, and I think that worried the markets. But then today, you got a housing number that was super strong. So it's this polar opposite. I lament. Let me get back to what I'm talking about here. So pretty good surge on the gold. I do think that is a lot to do with some worries in the banking system. We had the flight to the yields. We had people go to gold. I think this is just a carryover. Now, if you guys think this will continue, charting-wise, it looks pretty decent. I like it. I think it could probably park itself up around this area until fears go away. Maybe it'll come back down, but it seems like it's up there and it might stay for a while. Gosh, there's so much opinion out there. It's very difficult to trade without it, and it's not good to trade with opinion. Here's UPS. I like the pattern on this one. Almost an ascending triangle pattern. It's just not quite there yet. Where can I draw this from back here? But if it could stay above that 190-ish area, I'm okay playing something sideways to up. I don't know about like going up to the 195 or anything. I think it's a little too aggressive. I mean, because it could hit that in 3 days and come back down to 190. I just think this choppiness is going to stay. But diagonal spreads would be pretty cool here. Play that 190 platform. Even with a 190 back end, you could probably absorb a pullback to 185 if position size correctly. If you're selling a 195, I'm not sure if it's got buck strikes. It's UPS. It should. I haven't dug in it for a while, but play something close. You want to bring in more of a credit, not worry so much about your back foot on this if you're going to diagonalize, just because it's going to probably chomp around. If it does decide to break out above that 195, well, it's pretty easy to just let that one expire, buy it back, and ride out your other trade. So diagonal spreads are a little easier to play if you can afford them. And I mean that, folks. You got to be able to afford these. Okay, let's move over to the bear side since we have nothing sideways. And let me add to that. You need to be able to afford them, meaning absorb and sit through max pain, max gain, max pain, max gain before you actually get to the end of your expiration cycle. So here's 3M to the downside. I like this yesterday. I still think it looks good regardless of the market's gap up. You can see that this also gapped up, but it's slowly bleeding off, and it's still within this nice 20-day moving average. So whether you guys are waiting for this to roll over and break below the 100 mark, I believe that's what I was talking about yesterday, or you want to play this as something sideways to down, diagonal spread, once again, is on the table. Make sure that you take in consideration the way that it moves, position size, so you don't have to play the stop game. And that's another thing since I'm on topic, folks. If you're using stops, you're not going to make it. You won't. You're going to get stopped out of bulls or bears. Doesn't matter. It's just too volatile out there. And it's not just that the price action's volatile. If you guys have been paying a lot of attention to some of the options chains, I know that I've been digging through some of my trades, and I've been looking and saying, well, geez, like 3M, for instance, even though this is not true, this is just using it as an example. Let's say that 3M has 50-cent spreads on its options in general. I've been seeing that. I've been logging in that 50 cents has gone to maybe 60 or 65, 70 cents. They're just wider across the board everywhere, which makes it a little bit more difficult. So that's another hurdle that we have to jump across, but it's one that we do need to be aware of. Let's move on to our other bear here. This is Etsy. This one's leveling off. It did have the gap today, which has leveled it off. This is what I mean here. This moved lower than I want to see. It's kind of leveling off just because of yesterday and today's action. Yesterday and today, pretty good market tool. Pretty good indicators or news events. First one comes out, says, wow, that SVB bank just got totaled real quick. Is it going to carry over? Brings out the fear again, and then today, home sales are higher, and home prices are not really coming down that much. People are active, so it's positive, negative, positive, negative. It's a very bipolar place to trade. So sideways to down here, sure. Dude, you might want to sit through. Would you have to sit through and move to 110? Maybe back up to this retest about what is that, 115-ish? Yeah, you might. Just position size for it. Right? Okay. Let's see. BAH is the other one that I liked from last week. You guys had a really good trade. Thanks for this one. And it's just in the bear rally still. So I do like things that come back up and revisit certain points, and this looks like it's about there. Got to be patient for it. Let it roll over. Like you've heard me tout through all of these trades, I'll say it again. We're just not getting a lot of conviction in multiple days in either direction, up or down. So I really want to push diagonal spreads, horizontal calendar spreads actually would be decent. Butterfly spreads, slightly targeted up or down. Maybe a straight butterfly spread with a broken wing up or down with a slight bias in the chart, not your opinion. Trust me. You go that route, you're going to get smashed. Okay, that's it. Look at that. I did trades and a soapbox. Sorry you had to listen to all that. But I like those. I think they're pretty good trades. They're still doing pretty decent. Darren and Rob on the weekend class, it was really interesting, are opposite. I think Rob's a little bit more optimistic with a stubborn bullish presence in the markets, which is 100% true. And Darren is saying that the majority of the sectors are actually bearish, which is 100% true. Take that for what you will, right? Okay, so choppy sideways. I'm going to go with what Corey talks a lot about, choppy sideways. So, what have we done Monday and Tuesday and into Wednesday? And that's what this is over here on the right. So the Dow, the SPY, and the Qs are all up. But take a look at this. The diamonds, which is the weakest, the SPY, which had the banking problem, the Qs, which is just outrageously, crazily strong. Okay, maybe that's not crazily outrageous, but the strongest, showing a breakout, didn't do anything. This is a revision day. It seems like things are kind of coming back to consolidation points. The Q's not participating. Don't get me wrong, there's still stuff going up higher. But it's the diamonds and the SPY that are gaining the most since Monday, Tuesday, and Wednesday. So this could technically still be a bear rally. You tell me. We'll get to the charts in a second. Russell up big, oil up big, and then gold probably taking a break after the surge that it had last week, right? So let's get into these charts and see what we have. Now we don't have much, just these 3 days from this symmetrical triangle pattern. That's a tight one. It's tough. I'd rather draw a symmetrical triangle pattern off of more than just one point, right? I'd rather have another one down here somewhere. It just gives it a little bit more validity, but it does put a little bit more emphasis on the decreasing highs, right? So the decreasing highs here has got me a little bit more pessimistic. Then I go back out to this area and I try to make up some lines that intersect areas. And yes, I find myself overly opinionated and overly analyzing. And when I find myself doing that, I might be creating something that's not there. There's a lot of maybes, could be's, but until it is there, you kind of just have to either stay out of these markets if you're too opinionated or play the choppy sideways crap. So we'll see. This gap really threw off what I was feeling yesterday, just like it probably did most of you, so on and so forth. However, it is below that 50-day moving average. It's still within this descending, well, it's just above that descending line, so it could come back down. It doesn't really hurt me too much when it comes to my outlook on this, which is glass half empty, but it sure as heck takes away my confidence in throwing on a bunch of bearish stuff in the financial sector that I wanted to. I'm just going to have to sit for a minute. I could play something sideways to down, but I'm not going to get too aggressively directional. That is for sure. The diamonds. Now, this is just an absolute. Now, remember, the diamonds are the strongest so far Monday, Tuesday, Wednesday because it is having the largest bounce. This is I'm very comfortable saying it out loud with this just by itself. This is a bear rally in a very weak market. And once again, I love it when it comes back up and plays with price action that it's seen before in the past. I guess this could be higher back here, but this area and it's below a sloping 50. Sure, it's above the 20, and the 20 is still kind of sloping down. But this to me just has a little bit more pessimism to it. I'm looking for the bear side, watching it roll over. This is where I agree with Darren. Darren's like, hey, eight out of those sectors, 8 out of the 10 are bearish. Well, geez, this might be a good place to start. Then we run to the Qs. Don't worry, I'm going to summarize what I'm talking about here. The Qs is at a high base, ready to break out and move into a higher place, period. That's it. That's a fact. And even this pullback wasn't even a pullback. It was more of a high base consolidation. Still above that first gap that it had the end of January after the euphoric January move. Had a little bit of a dip there, but look at this. These lines never crossed. They never crossed, and they're both sloping up. And look at the price action. Well above the averages. So there's still a lot of excitement in this sector, or the Qs, whatever they measure, the 100 there. But generalize, you could add that to it. And there's just a lot of unwillingness to give up or dump. There's beliefs in detachment between the Fed and the NASDAQ. There's also beliefs, well, at least they shook off the bank worries and put it back into the NASDAQ. So this is super bullish. So where does that leave us? Sideways. Sideways. If you want to do sideways to up, do it in the NASDAQ. If you want to do sideways to down, do it in the diamonds. If you want to play something wide across both, fine. Just make sure you give it wide enough to where you can absorb the volatility, and not the VIX, but the price action, right? The price action of whatever stock or chart you're putting it on. All right, let's get into our economic numbers, because they are not really doing much for us, but giving us mixed signals. So what threw us off? Did anything throw me off? I should say that. I shouldn't say us. Me. No. I thought it was very dovish that the Fed lowered 0.25 from 0.50, kind of acknowledging, hey, we're seeing stuff that's good. We know there's worries. And moving forward, there's a low chance they might not even raise in April. We'll see. A lot can change between now and then. So I think they did their part when it comes to, if you guys are worried about us, don't anymore. And the markets kind of absorbed a pretty aggressive bank problem, which kind of took care of itself with yields. You guys have heard that. This created this, a jump up in the consumer confidence number, which a confidence consumer is going to do this. Go from an expected drop of almost 3% and turn that all the way around to almost a 1% gain in pending home sales. So what do you do when you get that? You go out and buy a house. Okay, geez. So we're not slowing down. The consumer's not going to slow down, but inflation's taking care of itself in the short term because of the banking problem. Is that interesting? It's pretty cool. We'll see how long that goes for. But yeah, it's kind of a fun. I think it's interesting, regardless of my opinion. Okay, so what do we got left? The PCE. I believe it's in there, is it? Yeah, there it is. This PCE, that's going to be huge. And huge for the Fed. I don't know how big it's going to be for the markets or anybody that's investing in it. So we'll keep an eye on it. That's the big elephant in the room. I think Rob referred to it as the elephant in the room. Unemployment claims is one that I like to watch. I think that's going to be interesting. We need to see this tick up if we want the Fed to be happy, which when the Fed's happy, interest rates won't go up, which will help a lot of things, right? If you believe that we're too hot or that we're not going to hit a recession. If you're on the other side of things, well, then we have another side of things. So that's kind of where I'm at. That's kind of what we're looking at for the rest of the week. Where am I at? I'll tell you in a second after I ask you guys. Let's poll the class. Where's my first one here? Let's do our weekly outlook first. Okay, pretty quickly, just about 40 seconds into it, 93% of you guys have voted. 100% vote. I'll move this over here. There it is. Okay, 100% voted. You can't make this up. 29% -1, 29% +1, 57% 0. That should answer your question on where you guys think these markets are actually going to end up for the week. That's kind of cool. I've never seen that before. Thanks, guys. Let's go ahead and hide that, and let's pull the other one. Pull the next poll, right? And it's going to be the monthly. And let's launch that bad boy. Okay, this poll is a little slower when it comes to the monthly outlook, which would make sense because it's a little muddled, right? All right, going to share it. And the pessimistic side's a little bit more apparent when it comes to the longer term. And it's easy to say that. The SPY and the diamonds, they both are long-term bearish rallies, kind of-ish. The SPY is above that 20 with a gap today, but we'll see where it ends. So 25%, 0.67%, negative 1, 42%, negative 2. So negative 1.5. Thanks, guys. Makes sense. All right, and I am right there. I'm 0 for the week, which we had the split, and I am negative 1, not 1.5. So I'm thinking the same thing, and a lot of that is today's gap. If today's candle wasn't up on the SPY, I'd be more of a negative 1.5 or a negative 2. Cool, man. All right, thanks. That's a lot of fun. So let's get to the sector analysis. And why this is kind of where I believe that we've just had a pretty good monster move over the last. Now, this sector, I would like to say this every time, the weekly performance is from Wednesday to Wednesday. That's what we're seeing here. And it's utilities leading the way, basic materials, and energy. All Dow components leading the way pretty aggressively. What's at the bottom there? Financials, which I thought had a bounce, but it's not that strong of a bounce. But communication services, which has been leading the way, is the weakest. And it's obvious when you take a look at the charts themselves. Sorry, folks, I guess we could have zoomed in instead of squinted down. But here it is. This is your strongest sector. The strongest, outperforming for Wednesday to Wednesday. That is an anemic, bearish rally. So I have to stay glass half full on that. Not done yet, right? Still got a green candle today. We're halfway through the day, and we got 2 more days with a PCE number coming out on Friday. A little dangerous to make a judgment call on a sector, at least for me. This is your weakest, which is not weak at all. It's consolidating below a peak, a massive, aggressive, euphoric move in the communication sector. But still, look at that, guys. It's just chomping along. Look at the slope of that 50. So it's kind of where you find it right here. All right, let me get a conclusion out of the way, and we'll take a look at some trades. So go ahead and please type those in if you haven't already. Catalysts seem to be absorbing into the markets on both sides. I kind of struggled with that, but I hope you guys get it. Good and bad news and or events are just being absorbed. Whether it's bearish and the markets react to it super bearishly, the optimistic bulls come in and say it's not that bad, and they buy the heck out of it. Whether it's bullish and we start to exceed certain areas, you'll get things like, I believe I talked about this yesterday, Micron, just horrible, bad numbers, missed all their numbers. It says that they're going to fire staff. Disney plans on firing staff. NVIDIA actually said that, no, it wasn't NVIDIA, excuse me, Amazon. Other things, everybody's firing staff. So that's bad. That's bad. So the markets start to fall down, or the markets are up high, and so the bears step in and say, no. These markets are too high. We got a recession coming, and the markets trade lower. So it's just being absorbed on both sides. Choppiness, I just believe, is going to continue. Be ready for a very aggressive sideways. I know that's a funny terminology, but it's true. Gap up, trade up, gap down, rally into the close, open up on highs, close flat. It's just going to be that way, especially when we're going to get into earnings. That's going to be fun. So sentiment, very bullish or very bearish based on price action. It is polarized. There is no, I'm okay with it. It's either you hate it or you love it. I'm talking about the markets. Inflationary gauges have been in line and slowing. Consumer unemployment and employment yet to contract. You can add home sales to that. So the economic data is conflicting in the longer term versus the shorter term. And the only way for that to catch up to itself is to let it play out. So you just got to be patient. Okay. Good luck with that. Let's get into some trades. Don't have a lot for you today. It looks like you guys are probably on the sidelines along with me. Let's take a look at what the markets are doing. And just gapped up. 200-something points on the down. We're just staying there. Look, was that 0.7, 0.75%, almost 1.5% and 1%. I mean, you can't write this. It's really interesting to see. And it is general. It's all across the board. The only thing is really struggling a little bit is a couple of larger healthcare companies. ABBV, one of our bear lists, right? So over the last couple of days, it's been on our bear level watch. So I mean, that's kind of where we're stuck. We're just at this area. You just got to pick what you have and play it more sideways and go from there. Okay, not a lot to talk about, so let me go to the board here. This might be a very quick class, which is fine. Comcast, Robbie's looking at. He says target of 32 by 35 target. He corrected himself, not 32. 35 target by 420, 428. I guess that'd be expiration. Let me look at this. Zoom on in. It's a put calendar spread, and I'm fine with sideways stuff. I mean, if we have to play the game that the markets want to play, then let's play the game. It's kind of funny. I feel like the market's in a political fight with itself. Optimists versus pessimists, and neither of them are winning. Okay, so that's a good way to play it. We've got 35 on the target. Okay, so a little bit of a bleed to the downside with the put side. So, okay, kind of a targeted calendar spread. That's what it sounds like. Yeah, okay. Good. Yeah, Robbie, you can absolutely do that. You could look into, for you guys who want to, you could try to butterfly that. Try to do a butterfly spread on that. One thing that's cool about the calendar, it allows you to let the one expire and then keep the other, right? It's like a diagonal. So you have that longer term. He'll have the 28th of April, and you're selling, what was the other one? Sorry, I didn't say it. Oh, the 14th. So you're only about a week apart. Robbie, if you're not gonna go too far apart on that, and you're only, what is that, up 2 weeks? That's 2 weeks. That's enough. Then you might want to look at a butterfly, a targeted butterfly. Massive reward to risk gains, but you are stuck with that dartboard target. However, you can take profits when it gets to 35. The cool thing is if your timing is right with the put calendar spread, then you could leave that long on and it could just bleed lower and then you're a superstar. I'm not mad at either. Based on what we have, I think that's probably going to be our only trade for today. CMCSA. Cool. Okay. John says he's kicking something around, and let's talk about kicking something around. I'm fine with kicking stuff around. These markets are really testing, and they've been testing a lot of patience, a lot of opinion. I'm talking about myself. Okay, round in my head, SPY June 30th. We're going out. Buy the 425 call, sell the 405 call. What are your thoughts? Let's take a look at it. Buy the 42. Well, let me zoom in first. Okay, move this. Oop, 425. Don't want to go too far. There it is. Bear call spread, a big wide one, right? 405, did you say? Yeah, that's correct. 405 call and do the 425. So that's $20. It's wide. But that's cool because that's a big fat credit there on the 405. And, what are your thoughts on that, John? Obviously, you're super bearish through June. And that's fine. This one, though, based on your reward risk, it's stuff like this that's just going to really drive you crazy. So let's say we eventually get to this point, and then you get a gap up to here. And that's going to be big. That's a $5 loss on whatever your credit is because you get a big range there. And then it proceeds to roll back down. That's kind of what I'm talking about. So I'm fine with the trade. I think it's great. It is definitely sideways to bearish. You're probably going to have a lot to think about or maintain, or it's going to create worry once you see it, or if it does get up above the 400 to the 405. This is going to be a very uncomfortable place for you to live, but still a good one. Still a good one because it could eventually roll over. Put it on today. We get this move tomorrow. Now you're happy. I'll tell you what, John, I love it, but I like the idea, but I don't like June. It's just way too far. Do something shorter. Do April, because if you ever get caught with this, maybe it takes till April and then it starts to move higher, and here you are in June. You're like mad that you just didn't do it in April. You can always put one on each week, each month, right? Don't be afraid to put them on shorter term, especially to absorb choppiness. Sometimes that helps. But cool, John. Let me put that on as bearish to sideways as a trade. SPY sideways with a bear. Okay. And Meta. Okay. Meta's one that I was going to talk about, but then I just left it alone because I just did not like it. It's just stinky. What was the other one that I was looking at? Was it Tesla? Oh, no, it was NVIDIA. That's another one. Bull? Sure. One more. Meta. 205, 190. Bear put spread. Let's take a look at it. 205, 195. Right where it's at. 195. Now, do you mean a bull put spread? The bear put spread expiring 425 if you want. If not, no big deal. Okay, no. I'd like to talk about it here. Are you playing this to the upside? I think you meant bear put spread. I mean bull put spread. Check me if I'm wrong there, Robbie. If not, that's because I just see it bullish. Oh, he wants to play the downside. Okay. I don't like it. I'll just be honest. And the reason being is it's meta. It's okay. Now here's once again, this is kind of opinion, but I don't have to be opinion because this is absolute price action. This is a well-known stock. This is one that had the euphorism. This is one that filed a lot of their employees, and they're coming back. It's in the hot area, communication services. Once again, it was one of the strongest. It's in the NASDAQ, and it is volatile. So contrarian trading on this one, no. I'll give you this. If you want to and you have the cojones to want to play something like a 210, 220, 200, 190 Condor, okay. Or if you want to lower that a little bit, because it does help you with the bear side. If you want to play it bear side, maybe a butterfly spread. I'm kind of making stuff up here, by the way. So I was literally going to put this on our bull watch list for today's class, and just said it last second. I'm like, I'm not going to touch it. I just don't want to touch it. I forgot what the other one was. Dang it. And Robbie, thank you for bringing that up, by the way. That's kind of a fun thing to talk about. What's another one? Was it Apple? I think, or it was. No, Apple's a bull. Look at that. That's just a bullish trade, unless it turns right around and falls. It's hard to do. Okay, NVDA. Let's take a look at the big old crazy NVIDIA. This one I believe is the new Tesla. It has been. It's the leading AI developer. Everybody loves it. It's its little darling. I think this one could just be gangbusters. This is another one I liked on the bull, but I just left it off. I'm leaving these off for protection for us. But hey, there it is. Cool. Thanks for the talking points, Robbie. And hey, if you want to play the bear side, be my guest. Everybody's got their strengths and weaknesses. Mine is contrarian trading. But hey, it could roll over and fall apart. These markets hit the fan. We don't know what's going to happen, but it's going to be choppy. Okay, cool. All right. Well, that's all we got, and that's fine. That's all I got. We have two trades. One's bearish. Let me type it in. It's Comcast, which I liked. I do like it. CMCSA, and then sideways to, well, it's bear, but I'm going to put it on the sideways, and I'll put a down arrow for that. So here you go, folks. Not much to do. If you're in trade, stick with them. If you have a strength or a bias, I don't want to keep people away from trading their bias if they're good at it. Just stick to your plan. Don't overthink it. If you find success in the bear side, don't just bear everything up. Or bull side, don't just bull everything up. Just pick your darts, know your strengths, understand when you're reaching for a trade, just making one up, or you're actually following a plan and you're good at it. That's a very hard distinction when you're full of opinion. Trust me. I can spout why this shouldn't be doing this and this should be doing that, but all that does is muddle my ability to follow my plan. All right, guys. Awesome. Let's keep it going, and if you guys got any questions, you know how to get a hold of me. We'll talk to you next time. Bye, everyone.